I used to think I knew a thing or two about investing until I learned from this book, and it's Warren Buffett's number one recommended book. So, in this video, I'm going to dig through everything you need to know in less than 5 minutes on this book in terms of why it was such a big impact, why Warren Buffett recommends it, who is Ben Graham, and the essential chapters that are necessary for, I think, everybody to get out of this book and why they were so important for just the whole world when they came out. So, this book goes through value investing, but let's first talk about who Ben Graham is, who's Warren Buffett, right? These quick things. But Ben Graham was basically an investor on Wall Street, and Warren Buffett worked for him at one point. So Warren Buffett is widely regarded as one of the most successful investors of all time, but his mentor was this guy, Ben Graham, and he's the father of value investing. And so this book is sort of his ethos, his manifesto, his entire philosophy on it. So, why is this book so important? This book came out with two key concepts that I think everyone nowadays kind of knows. But if you do know, it's basically because of sort of this book popularizing those ideas. So, if you ever see this book, I'd recommend highly to read through chapters 8 and 20 from this book. So, chapter 8, I'll dig into it, talks about Mr. Market, and chapter 20 talks about the margin of safety. These are two ideas that have been popularized. I think most people understand them now, but what did they mean back then and what do they mean today? So, Mr. Market is this idea of you might have a friend. I mean, I'd say the quick story would be you might have a friend who sort of just becomes super passionate about something, right? Maybe it's a band or it's a hobby and they're all about it and they tell you, oh my gosh, you got to listen to this person. I just got all the albums and, you know, oh, they're the best musician ever. And then you see that friend, a few months later or what have you, and you're like, oh yeah, like, how was the show or what do you think about that band? And they're like, oh, that band's whatever. But like check out this new band. And all of a sudden like their love for the band just drops. Or their obsession over the new hobby just drops. And so there's this sort of up and down. And so Mr. Market is basically the idea of somebody coming into the market, into the stock market or what have you, and they treat stocks that same way. There's sometimes, there's this like mania about the idea, mania about the company or the product or what have you, and the stock goes up. And then sometimes there's just this depression over or this low valley of just a lack of care, or they don't want to buy it, or or even worse, they might say, hey, it's like that band sucks or whatever. And so Mr. Market is this idea that that's how the stock market operates. It's not this brilliant, math. Like, it's not like run by PhDs or whatever. It's just these people that come into the market. They have this emotional volatility, and that's basically what Chapter 8 talks about. Is that when you're buying stocks or you're buying an investment, you're dealing with people like that, and so you can basically take advantage because sometimes the market will be low, people will be very emotional, and you can buy low, and you can also see the mania when people are hyped up and it's essentially like a bubble, and you could then sell high. So that's the general idea of chapter 8. And then chapter 20, this idea of margin of safety, the analogy that Warren Buffett likes to use is this idea of if you're building a bridge and you want to carry whatever trucks across, and the type of vehicles that are coming across, and you weigh it out and you say, okay, with the size of the bridge, you can have X number of cars, and if you add, if every car was carrying whatever the heaviest things you could possibly get, the max load of all those cars is whatever, 100,000 pounds. The margin of safety says when you design the bridge, you don't want to design the bridge to carry 101,000 pounds or whatever, right? You want to be able to carry 200 or 300,000 pounds. And so this way, even with the max load, there's zero chance of basically an error or something drastic happening. And so this idea is if you're going to make a move, make it where there's basically no chance of failure, because Warren Buffett always advocates that it's not often about the return on your investment, it's the return of your investment. Meaning that if you invest $100, it's more important to get back the $100 than it is to get $200 back, because you can have a lifetime of those 10% wins all wiped out from one bad investment that takes all of it away. So that's the idea of margin of safety. So those two ideas became very popular, or I wouldn't say they became very popular, but basically those two ideas were written about in this book and advocated by Ben Graham. Warren Buffett took those principles and for decades, I think maybe just really, I don't know, the last few decades, if people really understood that markets go up and down. But that's why this book was so popular. That's why Warren Buffett, was like, this is the number one book I think everyone should read. Now, I'll end with saying basically those are the key principles from the book. You could dig into the book, but I think that's the major components that you need to get from the book. I wouldn't say it's highly recommended from my own just kind of looking over some of the other money books I've gotten. No, I got a whole stack of them over here, some other books in there too. But I think about it as this book was written, I don't know, 500 years ago. Just kidding. But it's like, this book's written back probably almost close to 100 years ago. And so a lot of these ideas have been, proliferated into society. The new ideas here have been talked about elsewhere. And so I wouldn't recommend it as a book to read on investing. It's kind of dry. It's very, they really dig into analyzing stocks and just sort of going into like the nuts and bolts of value and this value investing and how to do it. So I wouldn't recommend it. It's his number one recommended book because of how much it impacted him. But I would say nowadays, I'm looking over at Bogle's book, the guy who created Vanguard, Common Sense on Mutual Funds. I would much more highly recommend that book. He wrote a much smaller book called, I think it was the little book on common sense investing. Uh, so there's a lot of other books I would recommend before this one, but this book has such a big impact on the whole industry that a lot of people, it's basically the Bible of value investing. So just wanted to talk about that book, the impact it's had on the industry, kind of the key components that people got out of the book. And now, hopefully, you don't have to necessarily read the book, but you now know everything that you need to know about the book. And that's what I got. So leave a comment if you are an investor or you like to invest, or what kind of investment books have been impactful for you. And then leave a like and subscribe for more value on this channel. Uh, from this channel, and I'll be shooting more videos like this. I think I'm going to be talking about just investing and money, and just sort of what kind of investments can you make with your time that lead to having those types of big impacts. I talk a lot about entrepreneurship, being an entrepreneur within an organization, and I look at it as if you can apply these principles to your own life of the Mr. Market, the idea even within my own self of what kind of let's say it's the skill set, what kind of skill sets am I investing in towards becoming a more effective communicator, a better speaker, a better team leader, a better motivator for my team at work. I think about what skill sets am I investing in, and am I treating them like Mr. Market? Am I hyped up about something and then I just drop it, right? And so it's sort of looking at it as this is how the world operates. I'm part of the world. I'm no different from that. And so it's helpful to put that lens back on myself to understand, okay, am I am I treating this investment like Mr. Market? And also, when I do make a move or an investment, do I allow for that margin of safety to tackle it, to kick in? And am I making it where I'm crossing that bridge and I've built it to be, very safe? Or am I just doing the bare minimum and I'm not accounting for that margin of safety? So a couple of key takeaways from the book that have been applicable to my life. So yeah, hopefully you got something out of the video. Leave a comment if you did. And until next time, peace.